Hi everyone, in this video we are going to start journalizing the entries. So we are going to first take a look at how much cash outflow there is in 2022. There are two cash payments. One is at the end of June and one is at the end of December. Remember, it's paying every 6 months. So as a result, we are going to have $60 of cash outflow. The interest expense is going to reduce retained earnings, and the way we are going to calculate the interest expense is the interest expense for the first 6 months plus the interest expense for the second half of the year. Now we have an imbalance between credit entries and debit entries. The difference is going to reduce the book value of bond by $16.57. Why? Because we are paying more cash than the interest expense itself. Remember, this is the interest expense. As a result, our obligation is going to decrease. So at the end of 2022, the book value of the bond is going to be $1,073.25, and if you look at it, we are going to see that these are exactly the same. So to answer the question, the book value of the end of the bond at the end of December 31st, 2022 is $1,073.25. The interest expense for 2022 is the sum of two halves, so we have these two, and the cash outflow, also known as interest payment, is going to be $60 for these bonds. Again, the most critical part here is the interest expense, where we take the beginning book value and then multiply that by yield to maturity, divided by 2 in this case because it's paying semi-annually, so we need to calculate it for every 6 months. And the other critical part is how to calculate the ending book value, which you will start with beginning book value. Any payments, which is cash outflow, is going to decrease the book value. Any accrued interest, the way we calculate it, is going to increase the book value. Since cash payments are greater than the interest expense, the book value is going to keep decreasing until it reaches 1,000. At that point, at the end of year 5, with a 5-year bond, we'll be paying that $1,000, and we will take that bond off of the books.